Dividend investing has changed my life entirely. Now, say what you want about it, but the reality is it's just an insanely easy investment strategy. And month after month, my dividend snowball continues to roll right along, with each dividend paycheck getting bigger and bigger. Truly a means to a financial freedom end. So today, I want to dive deep into my dividend portfolio and break down all of the dividends I received from the month of September to hit another dividend income home run. Ready? So it was quite an interesting month, to say the least, after Powell chopped interest rates to positive overall market sentiment, giving way to plenty of momentum for my personal portfolio, which I want to show you firsthand. So popping open my portfolio tracker with Gitcoin, which, by the way, if you're not already tracking your portfolio, I cannot speak highly enough about Gitcoin. So check it out if you really want to start to measure your investing success. But either way, here we are. We can see that we faltered into the red zone at the onset of September before the rate cut news. But after that news was confirmed and we saw a half a point worth of a rate cut, the market along with my portfolio soared. Personally, I hit highs of over $213,000 before now sitting at $211,910.35. Now, regardless of what even happened this past month, as a dividend investor, my reality was I was going to get paid either way, which is exactly what happened. And after all was said and done, 7 dividend paychecks hit my account. So I'm going to go ahead and break down all 7 of those dividend paychecks for you, and even share my thoughts on each of these stocks, whether I'm buying more, holding tight, or selling. But before I cover them, I want to pop back open Gitcoin to actually take a deeper dive into my portfolio with you. As of late, I have been committed to my goal of trimming my portfolio down to 2 ETFs and 7 to 10 holdings, to which I'm happy to report that I'm well on my way there to achieving that goal by the end of the year. And as of this video, I remain roughly 47% invested into individual stocks, while about 42% of my portfolio is invested into ETFs. So that's a nice balance there that will remain roughly this 50-50 split, aside from my cash position, which is coming in just over $21,000, or about 10% worth of my portfolio. Now, this cash position grew to what it is today because, as you'll soon see, Vanguard pays a hefty dividend, and for me, it's simply worth it to have my money in that settlement fund as I wait for more favorable opportunities with my stocks in focus for 2024 and into 2025, while also using it to just dollar cost average here and there once a week or twice a week into an ETF. Now, in terms of my sector breakdown, I'm 30 years old, which means I'm going to be more oriented towards growth, which is why you're going to see 48.6% of my portfolio invested into tech. Before I get into this other, which accounts for the cash position and the alike, so I'm actually going to skim right over that, head into healthcare, which comes at an 11.5% of my portfolio's weight, as well as consumer discretionary coming in at about 10%, followed by industrials at 5.6%, real estate at 3.4%, consumer staples coming in at 3.2%, and then slimming down into financials, energy, and utilities. But overall, it is quite balanced for my personal investor profile and how I feel comfortable investing, which is the most important thing as an investor. As for my holdings, well, we can click into the positions here to see that at this point, Vanguard's S&P ETF, ticker symbol VOO, has finally become the largest holding within my portfolio. Now, that's my investment foundation coming in at over $48,000 worth of VOO. Before we tap into my preferred tech stock of choice, that's Apple, which makes up about 12.5% of my portfolio. That totals over $26,000, followed by my second ETF in focus, which is the Vanguard Technology ETF, ticker symbol VGT, coming in at over $23,000 and growing. And then again, we jump into this sizable cash position here, over $21,000, followed by an investment into Alphabet, which totals about 10% of my portfolio, and Vanguard's total stock market index fund, ticker symbol VTI, which may be booted by the end of the year. Stay tuned, but that's at 8% of my portfolio. Then we have J&J coming in at just over $16,000 worth of my portfolio, followed by Realty Income, Visa, Lockheed Martin, some Tesla and Amazon, Coca-Cola, McDonald's, Darden, and Starbucks. But I do want you to stay tuned because, again, we have just 2 to 3 months here to actually shave some of these positions down to get to the 7 to 10 holdings goal. Now, in terms of the dividend income, I had one heck of a record month, and it all started back on the 3rd of the month with a dividend from Visa, ticker symbol V, which has been a 2024 stock in focus for me and a position that I would just like to hit 100 shares with in my portfolio. As for where it stands today, thanks to the negative news around it after after the Department of Justice raised the red flags and came at it with antitrust cases, well, we're down here to $271 per share after it was trading over $290 per share not too long ago. Click to the 5-year chart to actually see the power of Visa appreciating by over 60% over the last 5 years. Scrolling down, we tap into Visa's income statement to see year-over-year growth and even healthier metrics in the balance sheet, with assets that just continue to far outweigh liabilities, in 2023 assets alone topping $32 billion. This makes me a Visa bull. I am long on it all day long and continue to buy it. Now, again, it's a stock in focus, so aiming to hit 100 shares with it. I currently hold 25 shares. I received a dividend paycheck for $9.90 thanks to the Visa dividend coming in at 0.75%, which is impressive, but it's a mighty dividend growing at 18%, which makes it really impressive. Next up, I want to go ahead and talk about Johnson & Johnson, ticker symbol J&J, which, if I'm being honest with you, I love the dividend, but I'm going to come right out and say it. It may not be the best for an investor who's younger and with more time on their watch to invest. However, given the nature of the business in the industry that J&J is in, healthcare, it remains insanely secure, reliable, and safe for all investors. Now, we're going to see 1% worth of growth over the last year or so. Over the last 5 years, about 20% worth of growth. So again, if you need the reliability, this is where you're going to find it. But for holding 102 shares, I received a whopping $126.47, thanks to the dividend coming in at 3.06%, which delivered through on steady growth year over year here as well by 8%, with a solid 102-year track record. All about reliability with J&J. Following that payment, Realty Income, ticker symbol O, paid me a dividend. And for those of you who follow me, you know that this is the REIT of choice, given its moat in terms of its portfolio and clientele. But I'm even more bullish on it simply because of interest rates coming down, which is just great for real estate as a whole, and why we actually see Realty Income's performance on the year over 7% worth of appreciation. Now, as a shareholder of Realty Income, I hold 114 shares. I received $30.17, thanks to a dividend yield coming in at 5.02%, which is paid on a monthly basis with a steady growth rate of 5%. Now, investors, I have a few more dividends that hit my account, but before I cover them, I want to ask for your help now. And if you're not already a part of this community, join us now by subscribing. It goes a heck of a long way on my end, means the world to me, and most importantly, keeps you updated as an investor with my stock ideas and market insights every week. And if you're getting value from a portfolio update video like this, let me know by tapping on that thumbs up button so I know to keep making more videos just like this. But with that, let's talk McDividends with McDonald's, ticker symbol MCD, which for obvious reasons is a very reliable dividend stock for us all, but made its way into my portfolio and remains within my portfolio because of the fact that it's a low-key real estate powerhouse and not just a fast food chain. And for all the crazy kooks out there boycotting it, well, good luck bringing it down, especially with rate cuts coming and consumers are only to get back to spending. So we could just see that it's steadily already climbing on the year here, and it's likely expected to continue. Now, for owning just 5 shares, I've received $8.70, and I'm going to continue to hold it to enjoy the 2.34% dividend yield, especially with that yield growing year over year by about 15%. However, if you really want to talk about a growth opportunity and a hot opportunity for the future, let's talk Alphabet, ticker symbol GOOGL, which may be worth your attention right now. As for me, it was a stock in focus that I quickly established in my portfolio, amassing over 100 shares, allowing me to collect on $25.03 on a small but mighty dividend coming in at 0.48%. But here's the deal when it comes to Google. I'm in this one for share price appreciation, which I see as almost limitless heading into an AI tech-oriented future. And moreover, I feel that Google's main revenue source from advertising will only become more advanced, which means that businesses will be advertising with Google hand over fist as their budgets come back around. Now, after Google was just hit with antitrust lawsuits, led to $166 per share, but mark my words, it will be back, and there's no better time than right now to actually get invested into it. We can remain safe with Google and understanding their income statement is just delivering through on billions upon billions of dollars year over year, and an incredibly clean balance sheet as well, with assets that far outweigh their liabilities. Now, as for the last dividend paycheck from an individual company, it came in from Lockheed Martin, ticker symbol LMT, which has been a tremendously lucrative investment for me, more now than ever, now that World War III is seemingly about to unfold. But I'd like to continue to grow this very position, just given the world's total reliance on all things defense. It's a necessity. I mean, with limitless budget spending from from Uncle Sam, Lockheed is here to deliver for us all. And clicking into that stock performance year to date, we already see it's up over 32% and climbing. Clicking to the 5-year chart, almost 60% worth of appreciation. And scrolling down, we can see year over year just powerful revenue growth. That all keeps me as a Lockheed Martin bull, enjoying my 10 shares for now, which allowed me to receive $32.97 thanks to that yield coming in at 2.08%. And the best part about Lockheed Martin is actually the growth rate coming in strong at an average of 16%, bringing us to a final dividend distribution, which came in from the almighty Vanguard Settlement Fund totaling $86.50. Now that brings us to a grand September total of $319.97. Now I just want to quickly jump into my personal dividend spreadsheet with you to enter September's income, and we're going to get a new year-to-date total of nearly $2,000 and a monthly average that is increased to about $165. But overall, I just want you to note how we keep climbing and this dividend snowball keeps rolling. Now, investors, comment down below with how much you personally have brought in during the month of September. What were your top performers? Be sure you're subscribed to the channel. But if you're really looking to avoid some serious dividend investing mistakes, I do want you to join me right now, right here.